Hey everyone, me Kevin here. Today we're going to review Tesla earnings, which are expected within the next 5 to 10 minutes. We'll see how those are. I am totally in a mess of a studio that's not even remotely ready to film in, but I promised this morning that I would go live for Tesla, so I'm going live for Tesla. The scheduled release today time frame is 4:10 for Tesla. That is 4:10 Eastern. We've obviously got a lot of things that we're hoping for positive news on. I'm sure there'll be some things that. Oh, did it freeze a little bit? Yeah, look at that. It froze it. See, it's not even ready. I'm switching computers to get off the Mac for streaming, but I haven't even set that up yet. It's coming though. So anyway, things that we're probably expecting to hear about. We're probably going to hear something, I would imagine, in the analyst questions about Tesla and the connection to Twitter, of course, via Elon Musk. That is, what if Elon potentially wants to leverage Tesla shares to end up buying Twitter or something like that, right? So that's going to be something that comes up as my expectation. I would hope that we get updates on the ramp timeframes for Berlin and Austin. This is a really big deal. Berlin and Austin, we're expecting for Berlin, Bloomberg has reported 30,000 vehicles for 2022. And hopefully by the end of the year, we could be at a ramp rate of about 1,000 a week. The problem with that is we produce about 2,000 a day at Giga Shanghai, and Giga Shanghai was shut down for nearly 2 weeks. So you've got a substantial hit there on, unfortunately, the vehicle deliveries that we expect from Giga Shanghai, which is not great because basically whatever Giga Berlin gives us is now getting replaced by of course, the Shanghai shutdown, which sucks. So Q4 investor presentation, I'm going to pull that one up here in just a moment. We'll take a brief look and see what we can glean from the last investor presentation, and that'll give us a little bit of an update in terms of what we should expect going forward into Q1. Hopefully, we'll also get some updates on the 4680 cell production. Are we going to full production in Texas right away on that? Supposedly, the Model Ys being produced there are already using the 4680 battery cells, which is very, very important. This is your cobalt-free battery. Cobalt-free cathode, which is great because there are a lot of concerns about child labor, especially in Central Africa, which is not good. And then, of course, maybe we might even hear a little bit of an update on that stock split, right? The stock dividend that's coming. So TBD. Yeah, I mean, I think the rest is just going to come down to margin. So margin is going to be a really big deal, is my expectation here. It is every single time. And obviously Netflix, just like in Q1, has during Q1, when Netflix reported Q4 earnings, we had a disastrous result from Netflix. And that sort of set the stage for a really bad earnings season. Hopefully we don't run into that again. But this is your latest info from Q4. And really, I want to highlight specifically the things that we're going to be looking for. Of course, where's my pencil? I'll just use my finger then. There we go. Okay, perfect. So specifically things that we're going to be looking for that are going to be most important are going to be when we jump on over here. As always, we're looking at this automotive gross revenue. But what I really want to do is take out the credits. So when we get this new sheet, we're going to jump on over towards, it's actually later in the report. I'm trying to remember where it is. Let's see here. There's and we can calculate this too, but they'll give it to us as well, which is nice. We want automotive gross margin without the credits. So we'll go through this line by line when the new numbers come out. And I don't know where they hit it now. I think they hide it towards the end here. Automotive gross margin. This is the old information over here. So, but anyway, we're going to pay attention to this, and it's going to be a big deal, the Tesla earnings here. We already know that deliveries beat, so that's excellent. Now it's just a matter of can we get, oh, here it is. See, look at that. It's right here. It's right in the first section here. 29.2% excluding credits. See, that's great. And Elon's long run goal has been 30%. But there are a lot of analysts now who are talking about the potential for Tesla to actually get to a 40% gross margin. And like, I'm a pretty big Tesla bull. Oh, look, earnings just came out. Here we go. Just this minute. Oh my gosh, adjusted EPS, huge beat, guys. 3.22 on EPS adjusted. The expectation was 2.27. This is insane. Revenue was 18.8 billion. The expectation was 17.92. That's an incredible beat. Tesla plans to grow our manufacturing capacity ASAP. My goodness, this is what I've been talking about. Is that's the product is the factory. This is why I am now over I think I'm exactly 16,000 shares strong in Tesla. Tesla making progress on the industrialization of the Cybertruck. We're going to go through the docs in just a moment. Tesla gross margin comes in at 29.1%, but the estimate was actually a reduction to 25.8 due to those supply chain constraints. The fact that, and I don't know if this is, oh my gosh. Oh, wow. That's excluding the credits. Holy crap. Tesla Q1 automotive gross margin, including the credits. Are you freaking kidding me? Holy shiitakes. Dude, 39.2. You guys have to see this. Like, just look at the headline here. Look at the tippy top headline there. Tesla Q1 automotive gross margin, 39.2% versus the estimate of 28.4. Are you freaking kidding me? Holy smokes. So it actually came out 5 minutes earlier than expected, the report, which is great. I mean, we caught it within the first minute there. I want to grab the filing now. So let's get that press release. Holy crap. That's all I could say. I'm getting chills because that is so freaking good. I mean, this is the one company that just continues to blow my mind. I can't believe that they pushed margin to almost 33%. Okay, I got it. This is absolutely insane. Okay, Q1 update. I mean, oh my gosh. Let's see. What do we got over here? Okay, so operating cash flow less capex, so 2.2 bill in free cash flow after capex. This is so much money, man. It's amazing. Total debt excluding vehicle and energy product financing is nominal here. Okay, so basically talking about forgetting about their credit lines. That's fine. This is insane. I mean, this is with the credits, I'm assuming right here. 32.9% gap automotive gross margin Q1. I'm blown away. Like, I think tomorrow I'm just going to sell all my other stocks and throw it into Tesla. That's what the hell. During the supply chain crisis, like, I wasn't even expecting, the market certainly wasn't expecting that. I was hoping it would stay stable. The freaking crap grew 3%. Holy jeez, man. Okay, so production deliveries for Giga Berlin started March. Giga Texas started in April. I'm actually still wearing my cyber entrance bracelet. First quarter was another record quarter for Tesla by several measures, such as revenues, vehicle deliveries, operating profit, operating margin of over 19%. Our outstanding recourse debt has fallen below 0.1 billion. I mean, they're basically debt-free. This is insane. Outside of their credit lines, right? Expansion of production capacity. Okay, this is core here. Like, this is so critical, but people don't realize the value of what they're saying here, in my opinion. Expansion of our production capacity is core to our decision making. In the past 2 months, we began deliveries at Texas and Berlin. At the same time, we are putting significant efforts into in-house cell production, raw material procurement, and supplier diversification. Look, if they could just get these factories everywhere where the raw materials are, let's go. That's when you really start printing Teslas. Challenges around supply chain have remained persistent, and our team have been navigating through them for over a year. In addition to chip shortages, recent outbreaks have been weighing on our supply chain and factory operations. Furthermore, prices of some raw materials have increased multifold in recent months. The fact that some of their raw materials are up multifold and they are still increasing margin is absolutely freaking insane. The inflationary impact on our cost structure has contributed to adjustments in our product pricing, despite a continued focus on reducing our manufacturing costs where possible. We'd like to thank everyone, this is, holy crap. Look at this, folks. Look at this. Automotive gross margin. Now, this generally includes the credits, right? But look at this. Last year, we were at 26.5, 28.4, 30.5. Q4, we're like 30.6, and we're like, there's no way they're going to beat it. There's no way they're going to beat it. Now, because, of Omicron and the supply chains and all this bullcrap. Nope. Lols, 32.9%. Are you freaking kidding me? How could you invest in any other company? I mean, oh man, I need some vodka. This video is brought to you by StreamYard. You want professional live streaming software where you can throw up stuff like heading to 1030? Check out StreamYard by going to betkevin.com/StreamYard. All right, so holy crap. Look at the op margin. So operating expenses are things like SG&A, right? Selling, general, administration, because the way you do earnings, or the way you have income, is you have money. Come on. You have income that comes in. But the income comes in for products. And so there are these things called costs of goods sold, right? And then you get to what's called your gross profit, your GP. Then you're going to take out stuff like selling and administration, SG&A, right? And the fact that, and then you get to your op margin, right? Operating profit is what you could call it. Anyway, the fact that this is now 19.2%, which means all of a sudden they've gone up another 5% here almost. That's insane. Jeez, man. That's 4.5%, but close enough to 5. Free cash flow, 2.2 bill. Little less free cash flow here, probably because of the expenses of opening 2 factories. So not unusual here. This is absolutely incredible. Total revenue grew 81% year over year. It's not really a metric that I like to look at. This is what I like to look at right here. Increases in average selling prices. I mean, that's inflation based, obviously, right? They're raising prices because of that. Growth in vehicle deliveries, reduced costs per vehicle despite inflationary pressure. See, there's COGS, cost of goods sold. Holy crap. It is time for Tesla tequila. This is absolutely insane. Increase in regulatory credit sales. Oh, so they got extra credits. Okay, so I want to see less credits, what their margin was without credits too. So that way we can try to understand where this is all coming from. So this is our production. Look at that very slow ramp here on the S and X. You just went from 13,000 vehicles to 14,200. So I'd like to see that pump again a little bit. S and X deliveries, 3 and Y, fine. Solar deployed. Look at that. That's a plummet there in solar deployed. Check that out. So this right here was Q1 21. This is Q2, Q3, Q4, Q1. What the heck is happening here? Enphase just hit some like recent highs again. It retraced like 65%. And I talked in my video this morning about how I actually sold Enphase, not because I don't love Enphase, but because I'm worried that consumers are going to spend less on their homes if they're worried that there's a chance rates have already gone up, but there's a chance that home prices might come down. I wonder if that's related, and I wonder if we'll see anything in the earnings calls about that. The storage deployed is also down a chunk here. I mean, quarter over quarter, it makes sense to see these go down because people spend money on solar and energy at the end of the year. But look at Q1 of last year. We did a lot more storage though. That's really good. Almost twice the amount of storage. I wonder if that's mega packs or home storage. But solar deployed, very low. So I want to know what's happening over there. Still growing that supercharger network, which is phenomenal. I mean, that's one of the big reasons people love Tesla, as it's just you got to be able to charge these freaking cars. Okay, so we delivered our first vehicles with a 4680 made cell, single piece front body castings, and structural battery packs. So it's worth noting this Cyber Rodeo, which I went to, absolutely phenomenal. It's worth noting that this is so huge because it's really the pinnacle of that's it. The factory product is done. In other words, it's like the product has been made. We now have the single casting machine that makes the machine. They made the machine to make the GigaPress, and now they have the GigaPress for these single piece front body castings, the structural battery packs. Having a factory line that can put this together, this is the start of the copy and paste model. This is what, for me, that makes me so excited is you're investing in Tesla for that technology, the structural battery packs and the single body castings. To get those margins down. And if they can copy and paste these factories, there's plenty of demand. This is really, really incredible. So yeah, Elon is supposed to be in the call today. That is true. So weekly production rates were strong in Q1 in spite of spike in COVID cases. Blah blah blah. Okay, where is this? This is the you know what I can't wait is I can't wait for like here you to have a bunch of more gigafactories. You know, we got California, we got Shanghai, Berlin, and Texas. Let's get going on these, right? And that list will grow. Future product here is probably the Optimus robot. Okay, Berlin. Berlin is not using the structural battery packs. They're using the regular 2170. Those are the lithium iron phosphate batteries. Ultimately, Gigafactory Berlin will be able to produce Model Ys. Okay, I'm going to, I'll do the earnings call as well. And earnings call with Elon Musk. Let's just update that. So we'll do that as well. Yeah, okay, but let me see here. That is starting. I believe that starts in about, I thought it was 1:30, but I'm not sure if it's 1:30 or 5. I'm pretty sure it's 1:30, so we'll see. I will get a confirmation really quickly. 5:30. Oh, don't tell me it's 2:30. No. Well, then we'll have to we'll finish this and we'll have to come back to it. Oh, that's lame if it's 2:30. Okay. Well, whatever. So, oh yeah, it is 2:30. Okay. All right. Never mind. So let's see here. I want to find less margin, but also what other updates we can get. FSD continued with 7 software updates in 2022. Okay. I have to show you all something really quick. Yeah, because this was ridiculous. Okay. So hold on a second. My father-in-law, who drives the Lucid, he sends me all the bad news about Tesla. And he sent me this. Take a look at this video here, and it's worth seeing this, especially now's the time to do it. So let me make sure that we get audio on this. Here we go.
This message. You are watching Dan O'Dowd, and I approve this message. You are watching actual videos of the Tesla full self-driving technology as recorded by the drivers. From turning too tightly and hitting a pylon to swerving toward a pole. Jesus. Watch the bicyclist on the right almost get hit before the driver takes over. Sometimes it seems the Tesla doesn't want the driver to take over. I'm trying. This driver had to hit the brakes when the Tesla didn't understand a detour sign. Okay. Here it almost hit a truck. Obviously, I had to take over. And here it swerves into an oncoming lane. Look at that. Often the Tesla doesn't know what it wants to do. What is it doing? Or just doesn't know how to turn. Jesus. Oh my God. Tesla's full self-driving software for drivers and pedestrians. It's unsafe at any speed. Tell Congress to shut it down.
Yeah, so they literally have a PR campaign going. This company has a PR campaign going to stop full self-driving. And what's so sad is, first of all, it's a beta. You've got 60,000 users using the full self-driving beta. And these are the probably most embarrassing cherry-picked clips of FSD, but FSD is not fully ready yet. But you know what's even more funny is the company that sponsored this is called Green Hills Software. Take a look at Green Hills Software, folks. Green Hills Software, the videos that were shown were between February 2022 and October 2021. So hopefully the software has improved since then. We know it has. It regularly improves. Like we just saw Tesla said, they've updated FSD 7 times just in 2022, right? But take a look at this. Green Hills Software, they sell their own autonomy software. In fact, they call themselves the leading world in embedded safety and security. Green Hills Software is the worldwide leader in embedded safety and security. Hundreds of millions of vehicles contain software created with Green Hills platforms for automotive enabling car makers and suppliers to reduce manufacturing costs, blah, 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 increase product development, increase security and safety, spanning all electronic, automotive software, blah, blah, blah. Look at this. They even have a typo there. They have 2 periods after time to market. So basically, here's some kind of software provider that maybe does like traction control or whatever. And they basically put a hit piece together on Tesla, slamming the FSD. It's kind of gross, the stuff that you see about the sort of the PR crap that you see against Tesla. But let's go ahead and see what Tesla's update is. So Tesla says that FSD beta development continued with 7 software updates in 2022. Our team continued to work on reducing disengagements, particularly focusing on unprotected left turns and smoothness of ride through a reduction of slowdown events. We are aiming to release FSD beta to all customers before the end of this year. Yeah, Tesla, I still don't have it. I bought a new car just to try to get it. Now I have 2 Teslas just to see if I can get it, and I still don't have it. Initial release of the FSD beta to some customers in Canada started in March. So anyway, you're always going to get that kind of FUD, but personally, I kind of love it because it's like, hey, anything that makes the stock cheaper is an opportunity to go shopping. In Q1, we added a mobile app controls for climate controls, dog mode, blah, 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 blah. Enabled users to customize the color of the vehicle UI on the inside, improve charging estimation and accuracy. Okay, great. So what is this? Diversification of battery chemistries is critical for long-term capacity growth to better optimize our products for their various use cases. This is basically saying your standard range Model 3 does not need a 4680 structural battery pack. You know, your more performance vehicles do. Eventually, they'll all have those. But for now, you may as well just use the old stuff as well. This is why nearly half of the Teslas produced in Q1 were equipped with the lithium iron phosphate battery containing no nickel or cobalt. This is really important because nickel is getting destroyed in the supply chains. Cobalt has the child labor implications. LFP batteries are used in our standard range vehicles, as well as in commercial energy storage applications. Those would be the mega packs. As a result of our efficient motors, a Model 3 with an LFP pack can still achieve a 267-mile range. I always say asterisk on that because they always overestimate how far you can actually go. So what is this? Solar deployments decreased 48% in Q1 to 48 megawatts. The reduction was caused by import delays beyond our control. Okay, all right. I'd like to hear more about this on the earnings call, but that's very interesting. Solar roof deployments continue to grow year over year. Okay, cash and loan sales account for nearly all. In other words, they're not doing leases anymore. Energy storage deployments increased 90%, mainly driven by Powerwall deployments. That was a question I had earlier when we first looked at this. Is it mega packs or Powerwalls? And this is a sign of the consumer continuing to spend money on their homes in Q1. I expect this to decline in the future as people spend less money on their homes. As demand remains substantially above capacity, growth has been limited by ongoing supply challenges, although it may not decline if you have too much excess demand anyway. We are in the process of ramping production at a dedicated megapack factory to address the growing demand. Wow. Ramping production at a dedicated megapack factory. Okay. In Q1, services and other gross margins remain close to break even. That's pretty typical. As well as merchandise and Tesla owned. Year-over-year improvement was driven by strong used car sales, which they can make a profit off of, reselling. They buy it, prices go up, then they could resell it for more, right? That's profit. As well as growth in merchandise, Tesla-owned collision centers, and related services. Our insurance business continues to expand with launches in Colorado, Oregon, and Virginia. Tesla acts as an insurance carrier, which means we are the underwriter and bear financial risk. Yes, you do. We plan to grow manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. Yeah, tell that to Netflix, which is growing at 10%, and honestly, at this point, is growing negative. That's pretty sad. Sorry if you own Netflix. I'm just saying, like, if you're going to buy a growth company, there's a reason companies have the multiples they do. It's because of the growth that's expected. Now, you get a growth miss at Tesla, it'll be bad. But so far, I mean, we're impressing more than we're missing. Rate of growth will depend on our equipment, operational efficiency. Our own factories have been running below capacity for several quarters. Wow, listen to that. The existing factories have been running below capacity for several quarters due to supply chain issues. Sufficient liquidity to fund expansion. Pace of Austin and Berlin will be affected by the successful introduction of many new product and manufacturing technologies. Cool. Factory ramps take time. Yes. Continuing to make progress on the Cybertruck. Got it. Over time, we expect our hardware-related profits to be accompanied with an acceleration in software-related profits, like FSD profits. So where's without credits? That's what I want to see. So this looks like Berlin. That's Berlin. And here's Giga Texas. They had the coolest drone show at Giga Texas. It was really cool. Okay. Oh, take a look at this. This is so cool. I like this rendering. So this rendering really puts it into focus for you why the Tesla GigaPress is so impressive. So see all these colored sections right here? These make up, these are 171 pieces in total. And all 171 of those pieces, which have to be welded together and sealed, either hand cranked or welded with a robot or whatever, all of those pieces have now been replaced into just 2 pieces of metal. I mean, that is so cool. That's freaking awesome. Over 1,600 fewer welds. That's just so incredible. This is why you see these metrics move so much. Okay, where is the margin without... I'll just calculate it if I need to. I think I will do that. But we'll go through it first. So automotive sales. Okay, here we go. So we've got automotive sales over here, 15.5 bill. Regulatory credits. Oh, there was a double in reg credits. You see that? That's a big push there in reg credits. What happened there? Just Q1 seems to be high in reg credits. That's quite interesting. I wonder how much that's going to explain of our beat there. Energy generation and storage. We saw that. Okay, cost of revenues. Okay, research and development. Still spending more money on R&D, which obviously you like to see. Wow, look at this. Look at this plummet. You see this general and administration? I think they said something about stock-based compensation. Let me see. That was right here. I saw that. No, that's just excluding stock-based compensation. Okay. So for some reason, SG&A plummeted. Take a look at that. So this is your SG&A for Q4. It was only 992 at the end of or at the end of Q1 over here in total, which that's quite interesting to me. We were about $1.5 billion of expenses, and now we're down to 2.29. That's pretty incredible. Someone at Wall Streetaholics here says margin without credits is 30%. That's incredible. That's the first time then we've gotten to that. That's really, really good. Thank you for that. You haven't done the math yet. Looking here, EPS, look at that, earnings per share, $3.20. I like to use the diluted, so $2.86 over here. Okay, so net income positive, net income to non-controlling interest. Okay, that's fine. Here's your balance sheet. So they've got $17.5 billion in cash, which is roughly the same as what they had at the end of last quarter. And this is despite the fact that they opened 2 new factories. So let's see here. Prepaid customer expenses. Prepaids went up a little bit. Inventory is going up a little bit. Hey, Kathy's going to be looking at inventory. Inventory ticking up a bit. Probably has to do again with those new factories as well, because they got to be stocked with inventory, right? So you're going to buy more. Current liabilities. Wow. Current liabilities are in the neighborhood of 11. These are just accounts payable. Current liabilities are actually, oh, look at that. Current liabilities are $21 billion. But you have, let's see here, $17.5 billion in cash. You've got 6.6 of accounts receivable. 6.6 of accounts receivables right here. So if I just do cash plus accounts receivable, that's about $24 billion, which is more than enough to cover their current liabilities and almost enough to get rid of all of their liabilities in total, which are at 30 bill right here. So, okay. Good. Let's see if there's anything else that's really entertaining for us. Stock-based compensation down a little bit in Q1 compared to Q1 of 2021. That's quite interesting to see a decline in stock-based compensation from Q1 to Q1. It's normal to see a decline from Q4 to Q1 because of end of the year bonuses, but that's quite interesting. Stock-based okay, let's see here. Ah, there it is. There's the number I wanted. So, folks, this is the big one right here. So this is the line right here. Automotive gross margin without credits. So the big beat on credits over here was because for some reason tax credits went up substantially there at Q1 or whatever they were able to sell, maybe the SREX for or whatever. But Q1, 2, 3, 4, take a look at this gross margin. Without credits, you went from 22% to 25.8 to 28.8 to 29.2 to 30%. People thought Elon Musk was crazy when in 2018 he said we were going to hit 30%. And he did it. There it is. That's really, really good news. So absolutely great. All right. Anything else to see here? No, there's not. So I just have to say, one of the things that's so beautiful about Tesla is, look, as long as the consumer keeps buying it, I continue to believe that it is an opportunity to invest in what will prove to be a longer run inflation hedge. Now, I've talked a lot about inflation hedges on the channel, like consumer staples, whether it's Costco or the wheat ETF, WEAT. Personally, I've talked about this before. Personally, I don't like investing in those because I'll show you exactly why with a little picture that I'm going to draw. So usually when you enter an inflationary time, what happens is you get this rotation from tech over to what people think are hedges, right? And those are going to be your staples, your Costco, Procter & Gamble, your commodities, right? Like the wheat ETF. And so that's great. But what happens when that inflation ends up going away? Probably the end of next year, 2023, beginning of 2024, right? We're going to see that rotation. And anybody who traded into this sector as a hedge you got to be quick and you got to be nimble and you got to be able to rotate back over. You could do that. Personally, I don't like trading that much. So to me, I've been taking the opportunity to load up specifically more on Tesla, Tesla, Trade Desk, a few other names, but those are my big ones. I don't know, for some reason I like the T's. So that'll be interesting. We'll see. But there's nothing in this earnings report that makes me nervous so far. I mean, that is just the investor presentation. Let me see what the suits are saying. Tesla. So Elon Musk. Let's see. Don't censor me in Twitter shareholder and Tesla share. What? Elon Musk : don't censor me in Tesla shareholder lawsuit. That is a Reuters report. What's this? I think this has to do with the old funding secured lawsuit, which that's been another ride of a story. Elon Musk on Wednesday urged a federal judge not to prevent him from publicly discussing a lawsuit accusing him of deceiving Tesla shareholders by tweeting in 2018 about taking the company private, right? So I actually read that entire opinion from the judge. In fact, I'll pull it up right here. And it's quite interesting. I should probably do a video about it. But it really seems like a lot of it comes down to this New York Times piece that, I don't know why it's all glitchy. No. Hold on. I don't know why it looks like that. Hold on. I will try again. Oh, it's being weird. Anyway, there we go. New York Times piece that basically alleged that basically funding was, look at that, the judge says funding was far from secure and people were concerned about Elon's drug use during the time. And apparently Musk tweeted this while driving himself to the airport. Like, what? So I don't know, maybe that might be worth a separate video. Let's see if there's anything else the suits are saying here. So Tesla profit tied to software will accelerate. Yep, good. We like to hear that. Let's see if I go to T-Live, I could probably learn a little bit more. T-Live, yes. Here we go. Okay, so yeah, Tesla's regulatory credits more than double of that from the fourth quarter. And some auto reporters are saying that this is a sign that the other automotive companies are even further behind than we thought. Tesla solar deployments fell sharply because of the import concerns. We saw that. Solar industry has faced a bevy of logistic constraints and trade obstacles. Yes. On the Cybertruck, we got one line, making progress. Let's see. Okay. Oh. Tesla touts in its letter how it delivered the first made-in-Texas Model Y SUVs at its recent Cyber Rodeo event, though Texas restricts direct sales. We're still very interested in how the company structured those deliveries to get around the state law. Quite interesting. Tesla reported better than expected first quarter results, buoyed by strong demand for its EVs among ongoing supply chain challenges. So we've gone through all this. Bloomberg Intelligence says Tesla may move to investment grade as early as Q2 behind notable operational performance in Q1 under very challenging conditions in automotive markets. Credit default swaps on Tesla signal high-grade risk, with our long-term view that the EV manufacturer can approach Volkswagen in creditworthiness. Wow. Some bond upgrades. But that's great. Tesla continues to add to its growing war chest. We also saw that. The higher reg credits. Talked about the insurance. Lousy solar quarter. Yes. Yeah, okay. Yeah, no, otherwise not much here in information that we haven't yet covered. Let's see. Let's say there's one. No. Okay, good. Yeah. Wow, that's very exciting. So congratulations, Tesla shareholders. Usually the stock goes down after earnings. It'll be interesting to see what happens in the earnings call. So that's always fun listening to Elon in the earnings call. It might be, I'll probably do a summary of the earnings call, but we'll see. So, okay, good. Well, there you have it. The earnings call is in about 53 minutes. Given that they're usually a little bit late, probably be in about an hour. So we'll see you folks. I will keep working on this studio, which is a disaster right now. And remember to check out the programs on Building Your Wealth. That coupon code expires today. If you want to be part of the private live streams and all the programs on Building Your Wealth and new lectures coming, especially our new Series A opportunity. Course members are getting first dibs. So check out that code down below. metkevin.com/StreamYard for StreamYard. I'll see you in the next one. Thanks. Bye.